Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
Well, unfortunately, it was not to be. I was hoping maybe 3 days in a row of rate cuts, but we only got 2. Slight increase on Wednesday. And good reason for it. Like I said, nothing huge. A little bit of upward movement. But it's not like necessarily horrible news. And we'll get into it here this morning on the Thursday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single day that the bond market is open. And like I said, a little bit of reversal on Wednesday. We had the 10-year yield was up about 2 or 3 basis points. So, I mean, the way I kind of do it, if you ever go to my website, wilmingtonmortgage.com, and it's wilmington-mortgage.com. I could not get wilmingtonmortgage.com. That was taken. And if you go there, you'll notice I have like a little meter on the homepage that kind of tells you what rates are doing that day. And it's not specific. It's just telling you, is it neutral, really no move, good or bad, and then great and not great. What's a bad? I think bad is the worst category that I have. And so the way that I sort of figure that out is that any rate movement under 3 basis points is neutral. So if it's down or up, neutral. Anything between 3 and 10 is good or not good. And then anything above 10 on either way is bad or very good. Or great, I think is what I have. So today it was a movement, but it was nothing really that big. In fact, Mortgage News Daily's 30-year fixed rate index only had rates down or up 1 basis point. So no real movement there. And I would probably argue there were 2 main stories that caused this. One was manufacturing data out of New York that I thought was better than expected. Way better than expected. And then Trump, once again, I mean, he really just hates Jerome Powell because there is such an easy way. Trump's a stubborn dude. We all know that. This is crazy. I mean, we're like 2 months away from Powell going away, right? Riding off to the sunset, which actually might not happen now. And there was a great piece by Nick Timros in the Wall Street Journal a couple weeks ago, might have been a month or 2 ago, where he basically said that Trump's own doing is now going to cause Powell to be in his life for longer. Like if Trump had just not done anything, the results would have been the same in that he has not successfully pressured Powell to do anything with regards to rates, at least that we know of. And because Powell is now worried about the institution itself, the Fed independence and all of that, he's like, I'm staying on the board. Fed governors don't usually do that. If you're the chair and then your term is still technically, going to continue because of how you were appointed, I think every time they step down. And Powell's like, no, I'm not stepping down until I feel that the institution is in a place where I can step down. And Tim Rose is like, this is basically Trump's doing. That Powell, if he had done nothing, would have stepped down in May and gone away and followed the example of every other Fed chair. And he's like, I'm not doing that. And I don't know, it could be because of the Fed independence. It could be because Powell now also hates Trump because Trump opened a federal investigation into him. And so this is really Trump's doing. And all Trump has to do is just stop, end the investigation, end the pressure campaign, which clearly has not worked. And he doesn't want to do it. So today, I'm recording this on Wednesday, Trump goes on Fox Business and is like, I'm going to fire Powell. If he doesn't leave, I'm going to fire him. So Trump was on Fox Business in an interview. He said he would not drop the Justice Department criminal probe And then when he was asked about, Powell staying on, he says, well, then I'll have to fire him. Okay. Powell's term doesn't end until 2028, so he can stay on until 28 if he would like. And I mean, what's crazy about this is that the argument is just, it's bad. So before anything really happened, we had gotten sort of a signal from the Supreme Court that the likelihood of Trump being able to fire a Federal Reserve governor, board member was unlikely. It was the Trump versus Wilcox Supreme Court case in which Trump was trying to fire, I think it was the National Labor Board, was trying to get rid of some people on there. And the Supreme Court was like, yeah, he can get rid of those people. But then made it a point to say that the Federal Reserve's unique structure, calling it a quasi-private entity with a distinct historical tradition, was like, and they made a note to say that, yeah, Trump can pretty much fire anyone on any of these boards except for the Federal Reserve Board. And instead of Trump saying that and going, okay, well, that's that, he took it as like a challenge to be like, no, I'm going to try and fire people. So as we all know, he tried to fire Fed Governor Lisa Cook, and that is working its way through the courts. Right now there's a stay, so she's staying in her position on the Fed board. And that is really going to tell us. So, I mean, it's going to be the end all be all. The court is going to rule whether or not Trump can fire a Federal Reserve Board. As someone who watches the court somewhat closely, and like I said, looks at, past signaling by the Supreme Court, I don't think there's any way at all that the Supreme Court's going to rule that Trump can fire Lisa Cook. And so if they can't fire Lisa Cook, they're not going to be able to fire Jerome Powell. So it's like, I don't know why he's doing this. I don't don't think it impacted markets too much, mostly because, look, I got my Siri on and it's like picking up my whole conversation. It's like transcribing the whole show. There we go. I got rid of it. I don't think it's going to move markets because I think markets have realized that Trump, literally has no power on this. So it's kind of outside noise. But there is a good piece by Nick Timrose in the Wall Street Journal out on Wednesday, basically saying how this is like this unprecedented standoff. And it's really putting Warsh in a bad position because, man, he is going to be under some crazy, crazy pressure when his confirmation hearing, which I think is like, 21 days away? Yeah, it's like 21 days away or something like that. And then we saw his disclosures come out recently. I did not know that he was married to one of the Estee Lauder heirs. So his wife and him are worth $1 billion, and he's got a ton of money. And so that already is going to get a lot of attention. The Democrats are going to portray him as not knowing and being out of touch with the average person, and like any Fed governor has ever been in touch with the average person. Economists in general, for the most part. And that's not necessarily a bad thing because economists look at numbers. Remember, I think there was some controversy. Jon Stewart was getting criticized because he was talking about how, economists are so out of touch. It's like, dude, they're not making decisions based on how they feel. They're making decisions based on numbers, and the numbers say what the numbers say. And so I don't care if someone, there's a great quote one time from Milton Friedman in which someone asked if he'd ever been poor. He was doing like a college tour. These great videos on YouTube. You can go find them. And he said, this college student asked him if he'd ever been poor. He said, absolutely. I've been much poorer than you've ever been. And he says, but what does that matter? He goes, would you not allow a doctor who was an expert in cancer to try and cure your cancer unless they had cancer first? He just pointed out the absurdity of that argument. But Warsh is already facing issues with that, and this will definitely compound that. But I don't think that might have moved markets a little bit. But like I said, I think a lot of people, bond traders, everyone else, are like, they just know that this has become a moot point and that Trump is unlikely to be able to have this power. So it's really just kind of him venting, and maybe it moved markets. I think what really moved markets was the New York Fed manufacturing report that we got out on Wednesday that showed a surprising jump. Economists were not expecting that. The latest survey from the Federal Reserve Bank of New York showed the Empire State Manufacturing Index jumped to an 11, up from negative 0.2 in March, and it's the strongest reading since November. Economists were actually expecting it to drop to negative 3.1. So, a 14-point swing, not bad. The rebound was broad-based. New orders surged 13 points to 19.3. Shipments jumped 27 points to 20.2. Both of those are the highest levels since 2023. So some positive activity on the manufacturing front. Unfilled orders increased for a third straight month, pointing to sustained demand, which is what we've been hearing from banks recently about the resiliency of the economy. And labor conditions improved, with the number of employees index rising to 9.8 and the average work week climbing by 13.7 or to 13.7, suggesting both hiring and hours worked are increasing. Now, the only downside is that activity is putting pressure on prices. The prices paid index jumped 14 points to 51, while prices received held steady at 21.8. So what you're seeing is some of these manufacturers eating some of these rise in costs for them in order to keep this activity going. Optimism did cool slightly. The index for future business conditions fell 11 points to 19.6, suggesting firms still expect growth, but are less confident about the outlook. And so this is more likely the one that's going to pull down rates because we got price pressure, which could be an inflation issue. And then, of course, we have economic activity increasing, which, the Fed's not likely to move if manufacturing and other parts of the economy are showing growth. Why would you move anything? Why would you lower rates? You don't need to. And then, of course, with the inflation issue, definitely not raise rates or lower rates. And so that's a situation where it's not great for mortgage rates. Good thing for the overall economy, definitely manufacturing, but not great for mortgage rates. So I think that report, and then today we're going to be getting Philly Fed. We'll talk about that on tomorrow's show. So if we get, both New York and Philly showing some activity, that could be somewhat of a negative sign for mortgage rates. But that's why I think rates were up just a little bit today, more so than the Trump threatening to fire Powell. And then real quick, homebuilder confidence, not surprising, not good, worse than expected. National Association of Home Builders, Wells Fargo Housing Market Index fell 4 points to 34. 50 is the number that we're looking for. That's the break-even point. We are well below that. Weakness showed up across the board. The index measuring current sales conditions fell to 37. Future sales expectations dropped to 42. And buyer traffic slipped to 22. None of them close to 50. So all three major components are down. Like I said, economists were only expecting a 1 point drop, and it fell 4. So lowest number since last September. Not great. Regionally, not surprising, down across the board. Northeast fell 2 points to 42. Midwest dropped 2 points to 41. South held. Good job, South, at 35. And the West fell 3 points to 29. Robert Dietz explained, he is the chief economist, National Association of Home Builders, that this is about energy costs, noting that energy accounts for about 4% of construction costs, saying, quote, energy costs make up approximately 4% of residential construction material, input, and service costs, with near-term economic risks elevated. 70% of builders reported challenges pricing homes given uncertainty about material costs. So we already got kind of elevated rates, the uncertainty of Iran, and increasing energy costs. Not that surprising. A little bit surprising in that economists thought we were going to see a slight drop. We got a little bigger drop, but like I said, a drop was expected. So all in all, not a great day, which is fine. Like I said, rates didn't move a huge amount. Mortgage News Daily only had the 30-year down about 1 basis point. CNBC had the 10-year was down about just over 2, a little bit under 3 basis points. So, up yield-wise. So nothing crazy, but not the third good day that we were looking for. Oh, and then real quick, before we go, there was a great piece in the Wall Street Journal editorial board about Trump's blockade and how it could really, really be bad for Iran's economy and what that could mean, for ending the war. They're aware of how bad this is going to get if they allow this blockade to continue. So we've been talking about that for a couple of days, and so nice to see someone else backing up my claim. The editorial board of the Wall Street Journal. All right, you guys enjoy your Thursday. We'll be back here for a Friday show. Last show of the week. But you guys enjoy your Thursday. And remember, as always, do not wait to buy real estate. You buy real estate and wait.